Nieces and nephews, Uncle Charters only covers the price action. That's what I do. That's what I'm good at. That is my strength. I stay in my lane. So the things that happened with PPI and Uncle Powell today, it's not my thing to cover. But hey, you'd think the market would drop, but it didn't, did it? This is why Uncle say price action is the true shepherd. Okay? Especially if you're trading in the short term. What did we talk about in the previous video? We talked about how Friday's price action was very eerily similar to Monday's price action. We need to see the break of the range, 519.5 all the way up to 522.7 ish. You could round it to 523 if you want, but I was watching 522.7. Look at this nice long wick to the downside here, going down to 518.2 ish. Interesting level when PPI was released. Interesting level where we found buying pressure. You guys remember that triangle pattern? Had my fib level around 518.3. As you guys can see, the triangle pattern does slope down. And right around where the triangle pattern is and my fib level, that's where we found buying pressure. It happened during pre-market. So you can't really see it on the daily chart because it doesn't show the, the aftermarket and the pre-market action. If I go to like a 6-hour chart, you can see it better. You guys see that? Oh my goodness. Oh my goodness. Let me go back to the daily chart here. So yeah, interesting area where we found buying pressure now, isn't it, guys? Then at the end of the day, we finally broke the range. The chop range of Friday and Monday, guys. Amazing. So does this mean more upside is to be expected? Well, I tell you this. The chop phase lead to the trend phase, and the trend phase lead to the chop phase. It's a cycle of the market. And with the chop phase we had Friday and Monday, you'd think with this breakout, this could lead to the trend phase, which means a test of 524.6, previous pivot high from late March, or maybe even new all-time highs. Big possibility, but only if that critical level of 522.7 holds. Okay? We have to talk about that, guys. If it holds, of course, it's bullish. SPY's in breakout mode. We have CPI tomorrow. CPI could be the catalyst to push the SPY up to levels it shouldn't be going to. But it can. Okay? This market's irrational. Now, if CPI comes in or whatever and the market reacts bearishly, what you want to see is a breakdown of 522.7. Okay? Now, if we're talking just strictly price action, there can be a logical explanation for it. Besides CPI, of course. Okay? CPI usually the catalyst for what the market maker's going to do anyways. They just use it as a catalyst. Like, yeah, we was going to push the market down, but hey, let's blame it on CPI. We was going to push the market up, but hey, let's blame it on CPI. This is why it's very important to focus on the price action. Because while it can be bullish, as long as above 522.7, a breakdown of 522.7 could be bearish. And here's why. Let me go to my Discord. You guys familiar with stop loss hunting? There's a video out there. Stop loss hunting and trading exists. Look it up. It's supposed to be stop loss hunting, but they put stop hunting and trading exists. All right, look it up. But here's a little short explanation of it. You guys see this picture? You guys see the support line, right? The market makers, they set up those support levels. Those same support levels that Uncle gives you. They set them up on purpose. And they do it a lot so they can build liquidity below those levels. This happens a lot with the trap phase because the market makers are looking to trap and trick out and frustrate retail traders. So if you have been very frustrated trading the SPY these last couple of days, just know it was by design. It was by design. But anyways, so they create these support levels, so eventually they can build up liquidity below, getting people to buy off those levels. And usually they would set their stop losses below those levels where they enter. That's what we were taught. That's what we were taught. and liquidity builds up. So if we look at a chart like this, when it was chopping Friday and Monday, you would think, okay, well, that's the level right there, which means liquidity could be around that yellow zone, right? And the same can be said for the downside. Okay, well, we got a bunch of bounces down here. Liquidity could be around that zone just below it. So a lot of time what these market makers look to do to trick out retail traders is they like to go hunt for those liquidity. Stop loss hunting before they make the real move. So if we do get a false breakout of 522.7, any stop losses that were up there that was looking to short, their stop losses are pretty much hit. So if it breaks down 522.7, anyone who got squeezed out yesterday, they got tricked out and the market makers will push it back down. That's why we trade with the traps. Play those false breakouts and false breakdown setups. So if we break down 522.7, the breakout of this range, this top range, invalidate it and put 521, 519.5, 518-ish all back in play. All right? Does that make sense, guys? And with CPI tomorrow, we could possibly, fingers crossed, get a big move in either direction. Either direction. So 522.7 will be the equilibrium level for tomorrow. I hope it makes sense why. Okay? Above it, the breakout of this chop range holds. The chop range, the chop phase is over. We're entering a trend phase. Not sure how long it'll last. It could be quick. The chop phases tend to be longer. But above 522.7 is bullish. And below it could be a false breakout setup. Bearish. Breaking down the lower levels. 521, 519.5, and 518 will definitely be bearish follow through. All you got to do is follow the price action. It takes a lot of practice. Triple Q. You got, Uncle talked about how we had this blue trend line yesterday. And yesterday's candle bounced off that blue trend line as well as my fib level. That was bullish price action behavior. And you guys can see here the bullish follow through. All right. So next fib, the next resistance level I got is around 446-ish. So kind of above it now. But if it could stay above 448, 449.3 and new all-time highs would be in play. If we're going to get bearish, want to see a breakdown of 444.3 and 443. Those levels fail. Bearish 441.5 and 440 would be back in play. Below 440, bears would be in full control in my opinion. All right. Here's NVDA. Finally broke out those 904.6 and a 906 level. Broke out a lot of levels. All right. Even the 910 level. So those are support levels. If you're going to be bearish, this is a dead cat bounce. Got to break back below 910, 906, and 904.6. Those will put back in play 900, possibly all the way back down to 890. However, as long as above 910, if we clear 915 and 917, especially 917, higher upsides are possible. 919.5, 922, possibly all the way up to 926 would be a possibility. It would be in play. And with a stock like NVDA, definitely possible. Here is Tesla. The bounce continued. It looks like clearing 176, going as high as 179.49 today. I mentioned that everybody above 176 is bullish on Tesla. Very interesting what's going on here, especially with CPI. Could this be a bull trap? Whew, it's going to be interesting. But if it is a bull trap, the price action needs to confirm by breaking back down 176, putting 174.5, 173, 171.5, 170 in the fib level of 168.8 all back in play. But 176 is needed. It's needed to break down. It needs to break down. Excuse me. If it's more upside, then 176 must hold on any pullback. Needs to defend and prove itself as support. Needs to show that the market makers accept it as the new buy zone. Because if they do, break out of 178 and 180 would be bullish, putting 183, 184.6 or higher in play. All right, here is Meta also bounced, but didn't quite recapture the 472.6 level. If it does tomorrow, look to long. That's bullish. 175.6 or higher would be in play. To be bearish, 470, 468, and 466 all must break back down and will possibly drop all the way down to 458.8ish. Big possibility. IWM here definitely gave us a higher close. Close above that mother candle's high as well. Follow through, got to break out 207. Well, it's above 207 now, but next resistance at 209. Breaking that out would be put 211.8 in play. To be bearish, getting back below 207 and breaking down 205.7, that would be bearish with 204 and lower in play, okay? Here's Apple. It gave us a close above that blue trend line. Bears need a false breakout setup. If it breaks below 186.5, look to short with 185 or lower in play. That would be bearish. If it breaks above 188 and 191, that is bullish follow through, guys. Don't argue with the price action. AMD trying to bounce here. It still needs to clear that level around 153.5ish and 156 and 157.7 to put 160 and 162 in play. I'd favor a bottom is in above 162. AMD still has a lot to prove. All right. Otherwise, if it breaks down 150, bearish 146.5 or lower in play. Google, the bounce continues a little bit, but for follow through, 172 and 173.8 must clear. If it does, bullish with 175, 176.5 or higher. Below 169.8 is when I would switch back to bearish. Breaking down 167 and 164.2 would definitely be bearish follow through. Microsoft got an inside candle setup here. Interesting. The mother candle's high is 418.3 with the low at 410.8. Anything in between is chop. Stay neutral or scalp. Don't trust no move. If we break out above 418.3, that would be bullish. All right, that would be bullish. Got to stay above 415.7. That's a fib level. But breaking out 417 and 418.3 would definitely be bullish. Putting 420.8 or higher in play. To be bearish, got to stay below 415.7. Break it down 414. Break it down 411.8. Mother candles lows at 410.8. So that breaks down. That would be bearish with 409, 406 or lower in play. Here is Amazon. Trying to recapture. It's battling at that 186.8 fib level. There's a battle there. That's the equilibrium level. If it can stay above it, bullish. Clearing 188 and 190 would definitely be bullish follow through and put higher targets in play. If it's below it, breaking down 185 would be bearish follow through. Putting much lower targets in play. 183.5, possibly all the way down to 179. BA. Is this a double top? Staying below 181.5 is a start. Breaking down 180 and 177.5 would definitely be bearish follow through, and bearish follow through based on that double top. But if they break above 181.5, 183 or 184.6, double top canceled. It is bullish for BA. And here is Bitcoin. It's just consolidating, guys. Anything between 60.5 and 63.1K is consolidation. Above 63.1K, I'd be bullish. Below 60.5K, I would be bearish. And here is dark pool levels, 523.4, 3.2 billion, guys. What a whopping. And then there's 520.9, 2.8 billion. Holy moly. Holy moly. Let's take a look at the option flows here. 100K premiums or above, and it is bearish headed into CPI, but QQQ is bullish. Well. IWM is bullish. NVDA is bullish. Meta's bullish. Tesla's bullish. BA is nothing. Babito, what? Beto. Nothing for Beto. Bullish for coin. I don't even know why I checked these. Somebody told me. I don't even remember who told me. But yeah, nothing for Mera. And it malfunctioned. All right, guys. Thank you guys so much for watching, guys. I hope you found value in this video, guys. Good luck. Good luck for CPI tomorrow. Peace.